Dear friends, welcome to another episode of Crypto News. Today, the market is in turmoil once again. Bitcoin is testing levels, altcoins are rebounding, and major companies continue their purchases. Let's break down what's happening. The cryptocurrency market is in a correction phase. Yesterday, Bitcoin failed to hold an important support level at $92,800, and the next major level now stands at $72,000. Ahead of us are 3 days of key macroeconomic data that could determine Bitcoin's fate. If the news is positive, there's a chance to climb back above 92,000. For now, the market is experiencing severe shocks. Over the past 24 hours, the total crypto market capitalization has dropped by $150 billion, and the fear and greed index has plunged to 25, entering the extreme fear zone. The last time we saw these levels was in September last year, just before Bitcoin doubled in value. A coincidence? Hopefully not. Amid the overall decline, on February 26th, altcoins surged between 5 and 30%. Bitcoin has climbed back above 88,000, but it hasn't secured this level yet. Meanwhile, spot Bitcoin ETFs saw a record outflow of $937 million, with trading volume exceeding 8 billion. These are definitely not the numbers crypto optimists were hoping for. While Bitcoin still has some hope for recovery, Ethereum is in a much worse position. It is on track to close its worst February in history, even though this month has previously been favorable for its price. For Bitcoin, the last such failure was back in 2014. Technical analysts have also spotted a death cross pattern on Ethereum's chart, which usually signals a bearish trend. The bull, of course, is not superstitious, but it doesn't sound good. Despite this, analysts remain optimistic. Michael van de Poppe believes that a good period for altcoins is coming. He noted that the ETH-BTC pair has broken through 0.029 and is moving upward. Meanwhile, CryptoQuant's CEO Ki Young Ju added that Bitcoin no longer dictates altcoin season. Trading volume is now the key factor. Could an altcoin season be ahead of us? But the main reason for the correction may have been the largest hack in the history of the Bybit cryptocurrency exchange. On February 21st, 2025, hackers stole over 400,000 ETH, approximately $1.5 billion. This incident has already surpassed the 2021 Poly network hack, where only 611 million was stolen. According to Arkham Intelligence and Elliptic, the attack was carried out by the notorious Lazarus Group from North Korea. However, Bybit responded swiftly. It restored reserves, secured funding from 13 sources, and even announced a $140 million reward for any information leading to the recovery of the stolen funds. And what about the market? Bitcoin has dropped below 90,000, its lowest level since November 2024. All of this is happening amid macroeconomic uncertainty, U.S. trade tariffs, and other setbacks in the crypto industry. Meanwhile, rumors are spreading in the crypto community that Binance is manipulating the market, allegedly selling BTC, ETH, and SOL on purpose to liquidate traders and then buying back the assets at lower prices. At the same time, Binance CEO Richard Teng insists that this is just a short-term correction. The bull can only shrug. Time will tell who is right. But it's not just crypto that's falling. Tesla shares plunged by 8% after European sales in January dropped by 45%. The issue isn't with the cars themselves, but with Elon Musk's behavior, which buyers clearly didn't like. As the saying goes, sometimes it's better to stay silent. While the market is in shock, the SEC has begun reviewing Grayscale's application to add staking to its ETH ETF. If approved, investors will not only be able to hold Ethereum but also earn interest on it. Meanwhile, the European Central Bank is developing a blockchain-based payment system for central bank money settlements. Is this a step toward creating a digital euro, or a move toward total control? Stablecoin issuance continues at full speed. On February 19th, Tether minted 1 billion USDT on the Tron network, while Circle added 250 million USDC to Solana. More stablecoins mean more liquidity, but could this lead to an overheated market? This year, Bitcoin distribution among different categories of holders has changed significantly. Retail investors have reduced their holdings by 525,000 BTC, all of which have flowed into funds and ETFs, which have increased their balances by 519,000 BTC. Private companies are also keeping up, adding 374,000 BTC. Meanwhile, governments are selling, minus 62,000 BTC. Big players continue to accumulate. MicroStrategy acquired another 20,000 BTC at an average price of $97,000 per coin. The company now holds nearly 500,000 BTC, with a total investment of $33 billion. South African firm Altvest Capital Plans has also decided to invest, allocating $10 million for Bitcoin purchases. Bloomberg, with a hint of irony, noted that struggling companies are now buying BTC in hopes of drawing attention to their stocks instead of focusing on business growth. So what lies ahead? Bitcoin remains volatile, altcoins show promise, and big companies keep buying crypto despite the correction. Is this the calm before the storm, or the perfect moment for new opportunities? Let us know your thoughts in the comments. That's all for today. Thanks for tuning in. Don't forget to subscribe, and see you in the next episode.